Hello, I'm Jessica Amir for the Finance News Network. Today I'm with VanEck's Damon Goosen. Damon, thanks for coming and welcome back.
Thanks for inviting me back, Jess.
So first up, for those that don't know, VanEck is a leading provider of ETFs globally and in Australia. So how is the business progressing today?
Yeah, we're really pleased with how the business is progressing. As you know, VanEck is a global firm. So we've been in business since 1955. We're one of the largest ETF providers globally. We listed our first ETFs in the Australian market about 5 years ago. We're doubling in size every 12 months and continuing that growth rate, which is excellent. We now have 17 ASX listed ETFs. We've got very strong track records across those funds and really good research ratings.
Brilliant, thanks Damon. Now before we talk about your offering and one of those ETFs in a little more detail, maybe you can tell us about the case for investing in infrastructure and what infrastructure assets actually are.
Infrastructure represents a wide variety of assets, so things like toll roads, airports, railways, power generators, other utilities like electricity, water and gas as well. Revenue for infrastructure assets comes from a variety of sources as well. So for things like airports and railway operators, you're looking at revenue that's actually linked to economic activity. So as traffic increases, so too will revenue. For toll roads, it's often inflation adjusted revenue, and for utilities like power and gas and water, it's actually regulated by government. So as costs rise, so too will revenue.
So Damien, what are the benefits of investing in infrastructure as well as global infrastructure?
Infrastructure assets tend to have lower volatility than traditional equities and also a low correlation to other asset classes, meaning it's a great portfolio diversifier. The second reason for investing in infrastructure is the income properties. So you've got really strong, consistent and typically growing income coming through from infrastructure assets as well. The third case is about government investment globally in infrastructure. So that's a major tailwind to the broader sector and the companies within the sector.
Now to your VanEck Vectors FTSE Global Infrastructure Hedged ETF, what should investors know?
We provide investors a simple and easy to access exposure to 150 infrastructure securities globally through our VanEck Vectors FTSE Global Infrastructure Hedged ETF, or IFRA is the ASX code. IFRA tracks the well-regarded market benchmark for global infrastructure. It's a capped index, meaning that there's a cap put on any individual sectors that are overrepresented in the broad market. So typically utilities make up about 70% of most infrastructure indexes. The index we're tracking puts a 50% cap on that index. There's 50% to utilities, 30% to transport and 20% to other infrastructure sectors like pipelines, to give a really broad representation of the global infrastructure universe. Other things regarding our IFRA is it's a very low management cost. It's 0.52% per annum, which is a fraction of the cost of active managers in this space. And I should point out that this is an asset class where active managers have a very poor track record, on average, of outperforming this index over time. So there's around 150 companies in the index. Some of the largest holdings are companies like Transurban, NextEra Energy, Atlantia, American Tower Corp. From a country perspective, it's very well diversified. The largest country exposure is the US at around 50%, but it's probably worth noting that these are companies that are domiciled in America that are operating infrastructure projects on a global basis.
And what can you tell us about performance?
Well, we've seen a lot of uptake of IFRA of late as investors and advisors have sought the relative defensiveness of the asset class. Obviously, there's been a lot of market volatility. So 3 months through to the end of November saw the Australian market fall about 9%, saw US equities down about 6%. In that time period, IFRA was actually up. It was up around 1%. If you look out over 3 and 5 years, the index is around 10% per annum.
And what are the risk-return characteristics of the index?
Infrastructure typically is lower volatility than equities. The correlation against other asset classes is quite low, meaning it's a great diversifier. From an income perspective, it's very strong. So IFRA has a current yield of around 3.8%.
And Damon, how can investors access this opportunity?
Well, being an ETF and listed on the ASX, it's very easy. So one trade under the code IFRA or IFRA. IFRA is available on most platforms, given its size, its track record, and its very strong research ratings.
And lastly, Damon, what's your final message for investors today?
I'd strongly urge investors and advisors to consider an allocation to global infrastructure. Very strong income property, so IFRA is yielding 3.8% at the moment. It's typically a lower volatility asset class with a low correlation to other asset classes, meaning it'll diversify your portfolio really nicely. The government spend on infrastructure is a major tailwind for the sector as well. What we actually often find, despite all these positives, is that infrastructure is actually an asset class that a lot of investors don't have in their portfolios. What we're about at VanEck is providing investors intelligently designed solutions to asset classes that we think they should have in portfolios that are typically underrepresented. Our Global Infrastructure ETF, IFRA, is a great example of this. It's very low cost, it's transparent, it's physically backed, and a great way of getting diversified exposure to 150 leading infrastructure stocks globally.
Wonderful. Damon Gosen, thank you so much for your time and for the introduction to your infrastructure ETF.
Thanks very much, Jess.